Good afternoon. Welcome to another episode, I guess, of the podcast. We haven't really got a name for it right now, but the MSc School Management podcast, and we've got student-led one. And today we got another lovely guest who is from the course from School Management as well. She'll introduce herself now.
My name is Divya. I am from MSc Management doing the finance pathway, and I will be doing my optional module in mergers and IPOs.
Wow.
Oh, that's interesting.
Yeah. What was your undergraduate degree?
My undergrad degree was also in management finance.
Yeah. Was that in the UK?
No, that was in India.
Oh, really? Wow.
Yeah.
Oh, okay. Wow, I didn't know that. And so we're doing the topic for today is VCP, all that good stuff. And I suppose the first question everyone gets asked as well is, why UCL? What's helped you? Why would you choose this course? How is it going to help and progress a directional view, I suppose?
Apart from the view.
The view, yes. Lovely view.
I think I looked at the optional modules first and all the subjects they were teaching. All the courses taught here was something I didn't do before in my management degree. Things like decision and risk analysis or mergers and IPOs. So I really wanted to study these courses, which is why I think I chose UCL. There were other options with the same modules, but yeah.
Oh, really?
So you basically did choose something intentionally which is challenging to you, don't you?
Yeah, I mean, so I also saw the professors who was teaching, and like a mergers and IPOs professor. He has done like BBC interviews and publishing.
Oh, really?
His CV is 3 pages long, and I think that was just fascinating that I get to learn something from someone who's into the industry for so long.
Of course.
So yeah.
Interesting. I mean, we have next term, we don't acquire the interesting courses, but in the MSc Finance program, we have the VC and
VCMP module.
VCP module.
Really?
It's next term, in term 3, led by George Namour.
Oh.
That's gonna be interesting, of course.
Yes, I think the most concern most people have about that was the 100% exam weighted results. But I think a lot of people have chosen that regardless of that, purely because of that interest in VC. That one word that everyone seems to be really interested in right now. I think VC is really hot, and so is ESG right now. And
it's like a trend.
Yeah, it is.
Yeah. But it's also, I think, because of how much money is being held in VC right now, it's quite impressive. I think it'd be interesting. Why do you think there's such a huge trend in interest in VC and PE? Especially.
So I'm gonna talk about it from a financial perspective. I think. When investors want to invest, there are either you can go to the markets or you go to VCP, private equities, hedge fund, etc., etc. I think the people want to hold their money more privately than publicly. Even companies are resisting to go public now, and they prefer to be private. So I think it's that they'll be investing in something. The risk taking also, because the youth wants to bring in that different edge to their. And everybody's innovative nowadays. Everybody has a startup idea.
Yeah, that's true.
Do you think that's probably because of how low the cost of capital is now for a lot, especially in technology? I suppose it costs now, maybe a couple £100. You've got a good laptop enough to code and develop with such amazing free software online. I mean, another great example is Canvas, is a great online software.
That's really good.
Which is a free software just to make a logo, and that's another cost to entry barrier that's extremely low now and basically gone. Whereas I suppose a couple of years ago you have to pay a designer and you could do it yourself. Yeah, do you think that might be a factor in all the interests?
So for UK and probably even the US, I think that's true. But for India, I mean, the ease of doing business part of it is really, really, really tough because licenses and setting up a business. Also, I think India hasn't really adapted to the startup ecosystem as much. There are startups and they're on the rise, but it's not there yet as much as it's in the UK or the US, especially the US, with Silicon Valley and everything.
What do you think, in which direction will the whole VC industry go? Like, is it more, because if we take a comparison between the US market and the European market, I mean, it's really obvious that the US market is absolutely massive compared to Europe. And also in terms of investment size, the US always is in front of Europe. So do you think there will be Europe will catch up?
It will. I mean, I think whenever someone talks about VC, it equates to technology automatically, apparently. And I think it'll catch up eventually. Like a few more engineers here and there, a few more software developers, and we're good to go, I think.
I think really interesting topic we haven't touched on but has been alluded to is obviously we said technology, and you mentioned Silicon Valley a second ago. And obviously 2 days ago we had one of the largest the largest Silicon Valley startup companies, banks, actually go bust. First time bank of this size, I believe it held, was it 200 billion, I believe, in capital. And that obviously went under, which is the first time a bank of that size went under since 2008. We've already seen the impact on the markets right now in the last couple hours.
Especially the financial markets.
Especially the financial markets. It's reached UK markets especially, which I was surprised by. Yeah. And I thought it would be rather isolated, very much inside America, the shocks. But I suppose that was a mistake I made in assuming that. And I'm just wondering, are there long-term ramifications for this? And what really, I guess, can we expect in the next couple years, given we're going into recession for VC industries?
So I was reading Bloomberg news article, and they equated this to largest downfall since 2008 crisis. I mean, it might not have long-term effects if they overcome it, but I think VCs are going to be hesitant to invest in something that is, or put their money somewhere where it's not going to be trustworthy. They're going to look into interest rates, lending, etc., etc.
No.
It's about trust, I think, more than anything else now.
No, I can totally relate to that. I mean, if you look at I have some numbers here. The 2021 was exceptionally successful for VC, wasn't it? And then there was 2022, like the beginning. Every startup had to prove their actual value. Like all the valuations came down, and I think the trend is still on the track that, like, every startup now has to prove its value, has to prove some track record, and the VCs don't just blow money in it.
No. I think it's also like the higher the risk, the higher the return, but that's the risk. So there's downfall to it, and people lose money as well. So it's that's why I think public versus private is such a big argument, that why not invest in equity rather than VC, and it's vice versa.
It's interesting. I think one of the things I found very interesting, I did a term paper on, was the existence of zombie firms. And if anyone doesn't know what that term means, essentially it's a company that shouldn't be alive but is, as a zombie, I guess, acts. And the idea behind this is, it's such low interest rates in 2008, especially adjusted for quantitative easing, it's quite amazing some of these companies who are allowed to survive because of the potential returns or the basic existence of basically no cost of borrowing, that they're allowed to survive and keep cash flows going. I think with this whole shake-up of economies and finally go back into possible recessions in, I believe they estimated late 2023 or early 2024, possibly for America especially, we can see a lot of these zombie firms fall, and I think a lot of these will be some VCs possibly, which would then impact, I suppose, the progress of future VC development. I'm personally been very lucky to be involved in angel investing through my family, and we've done quite a few ones in the UK, and it's really interesting to learn about the types of debt you're allowed to, or the types of debts, and how you would be allowed to fund certain companies and what the differences is. Our family particularly gets involved in convertible bonds, which being the main one, and I think we've done a lot of we've done a couple of courseworks in that recently, which is great fun. I really do enjoy convertible bonds, and this whole idea of I suppose debt is hugely key to VC. I mean, it's almost the underlying foundation. Is there, I suppose, anything that you found about debt in particular to be quite interesting when talking about VC?
So I was consulting for this startup, and when we looked at their numbers, because we were consulting as a group, that debt to equity ratio, I think debt was here and equity was here. And it was, I mean, it's not a bad thing particularly, but once you know those numbers that the funding is more debt than equity, I think there's this hesitance, I would say, that comes along with an investor.
Of course.
That's very common for...
Because the ability to repay,
of course, yeah. And that's very common for, I suppose, tech industries to have such a large leverage in debt. Is that why is that in particular? I haven't really looked too far into it. I assumed it was just because the equity is quite low because they don't need much equity behind a tech
yeah,
company.
like compared to financial institutions, right? I think they have to have like at least 5 million in equity. Like that's the minimum requirement.
Right.
And I mean, tech companies don't have that.
Right.
I think that is just easier to get.
Just easier to
Yeah,
get. Okay. Oh, yes.
It's available easily, I think.
Maybe not after SVB went under.
I don't think after this, but it's like fodder to these tech companies. It's easier, it's faster, and you don't have to repay it all at once.
Interesting.
If we kind of want to make our way back to UCL, how do you think your program helps you now in VC, if considering that you perhaps want to go into VC later on?
So I actually want to go into investment banking. So when I came to UCL is when I actually got into VC so much. And then I heard about the club VCP, which is the Venture Capital and Private Equity Club. I started reading more and that is when I got so much into it that I was actually pretty, I'd say, fascinated by this whole world. Now I'm somewhere in the middle. But I like it. And I think it's my coursework like investment management or probably learning about the markets or doing consultancy, corporate strategy. I think all of this that comes together, you all need it in VC. We somewhere or the other you need that skill set or that knowledge to get into VC. So I think that's one of the things that this course has helped me along with the club.
That's really good.
Yeah, no, VC is really difficult to get into, and it's...
Yeah. I heard someone say you have to be persistent until you can't be to get into VC. Cold emails, things like that.
A lot of that, and I find a lot of the experience or level of educational quality of employer they're trying to look for a lot of the time are people with experience in valuation, which is excellent. You're doing a lot of IPO, merger, valuation courses you mentioned. Another thing is just experience in the certain topic. I mean, some VCs specialize in biochemistry, and they're not going to employ someone unless they have an idea of biochemistry, I suppose. So a lot of these are very specific, and I suppose when I've applied for VC firms, it's definitely finding that niche of what you identify that you're relatively competent in. For me, it was very much when I apply for some of these places, it's very much technology. So I've got quite a good background in physics, so I quite enjoy that. And I think a lot of that is quite important in VC, knowing that your key strengths and how to integrate that to financing, which I think you've covered quite a lot. And going back around to the VC club and PE club, what is their offering for people who might not know actually much about the club?
So we have events that are held. Recently we had a few venture capital analysts, they're investors. They came and they spoke to us, they told us how to get into the industry or what could you expect in this industry. And a lot of the people were from MSc Entrepreneurship, the course, and they're always looking for funding, I think.
That's true.
They always have ideas. I think for someone who already has that idea, it's good for them to know how to move further into the industry, being on the other end. And if you want to get into VC, I think it'll just give you the knowledge you need, maybe even the connections. We have an event happening in April, I think, where we'll go to level 39 and you can meet people, all the founders and CEOs. It'd be cool.
Yeah, I think it's such a great opportunity to gain some insights, which you rather wouldn't have, unless you won't have such events, right?
Yeah. I think also because of this club, I got my internship.
Oh, wow.
And it was, it worked like magic or divine power or whatever you call it. But it happened, and I'd give it to the VCP club that I got it.
That's really good.
Yeah.
That's brilliant. And I think that's just one of the key things of being on this campus is you're surrounded by so many amazing companies, and I think we're top level of this building, but below us are several major corporations. There's so many companies you can meet, and it's great to see that we're integrating with some of them and developing connections. And I think with that though, we'll probably end it there. It's a very nice stopping point. So thank you very much for coming on.
Thank you.
It's been a pleasure, and we hope to get you back on soon. Thank you very much.
Thank you.
Okay.
See you next time.